Okay, welcome everyone to the first half 2022 global WorkTech VC look back and look forward. The quarter Q2 just ended yesterday, so today we begin the second half of the year, and it's certainly an exciting time, to say the least, an interesting time to be looking at growth capital coming into any category. But especially in this category, in our category of global work tech. Before I dig in, I want to just share a couple of things about WorkTech. WorkTech is a global advisory and analyst firm. We have a unique lens on the space. While we do research on trends with HR and talent leaders and business leaders globally impacting work, we're really looking at adoption of the technology, spend on the technology, as well as investment coming into the space and aligning all of these trends for buyers, HR tech developers, investors, anybody who's interested in this space. So while we will dig into some feature function product, we're much more about fit, adoption, growth, scale, and spend. So that's WorkTech, and we can, if anybody's interested in learning more, please hit me up via Twitter, email, off the website. You can follow us at all of these wonderful usual places. We also have the Impact WorkTech Accelerator, which we've been really selective moving into our second cohort. We just launched Impact last year, and we have organized a syndicate for funding, and we're bringing in some new investors to participate in the accelerator in the way that we've done it in the past. So this is exciting, and we're seeing a lot of really interesting companies launch. Even at this time, with some of the uncertainty in the space, I guess no better time to launch a business, and we're excited about the cohort that's shaping. We still have some time. If you're interested in referring someone in, you can get all the details at impactworktech.com. If you're interested in being a mentor, please do the same. Those are the only shameless plugs for today. At least for now. So what happened in Q2? Well, 4.6 billion was tracked, and we tracked that across 96 deals. This is through midnight of last night. Really, when you look at this chart, the first question that might pop into your mind is, where's the slowdown? And that's a good question, because it really hasn't happened in the work tech space this year. There's a lot of uncertainty, and that uncertainty is having an impact. But as you can see, we're looking at dollar volume and deal count, and going all the way back to 2017. In every one of these sessions where I'm reviewing, the quarter or the half or the full year, I repeat this phrase: a quarter does not a trend make. So it's important to step back and have some perspective. And if you keep the headlines and the broad B2B tech or big tech news about what's happening there, if you sort of shut that down in your mind for a minute and look at this chart, it tells a very different story. And it's interesting because this has come up repeatedly. I'm having this conversation repeatedly in the space, and I'll get into what I do think is happening and what I do think will happen. This chart is always one of my favorites because we break it down from 2017 forward, looking at this is where we implemented tracking system, and we've got tools and AI that's sort of scraping and bringing everything to us, and then we categorize. We started this process in 2017. And when we look at the year to date, we did about we've done exactly 9.4 billion is what we've tracked across 231 deals. Last year, 2021, was the biggest year ever by a huge margin. It came in at 17.9 billion. So if we keep this pace, we could meet or exceed what felt like an anomaly last year. And so that's, again, stepping back, looking at where are we on pace. This is a really interesting view. And as you can see, just at the midpoint through the year, where we've well surpassed what prior to 2021 were our biggest years ever in growth capital coming into the space. So yeah, nothing makes sense anymore. So it did, during the COVID times, as COVID was impacting us, my muscle memory went to get ready for a slowdown. It didn't really happen. And I think the things that we should have learned through COVID and is that the economy is very different now. The investor calculus is very different now. Investors participating in this process are very different now than they were 5 years ago. And the general view to any given category, things don't get spread evenly across the market or the economy. It's generally lumpy as far as impact is concerned. And and this is even true when we look deeper within our own category. Some are impacted, some subcategories are impacted greater than others. But for whatever reason, through COVID, or for some specific reasons through COVID, and now as we're at the beginning of this, what looks like a new economic cycle or transition to one, we're not experiencing what a lot of the rest of the market has experienced. So lucky us, those of us who are focused in this space, but we need to be cautious moving forward. So I want to share this. This is a chart that made some rounds. It's CB Insights data. It was shared by Professor Scott Galloway, NYU professor who does the Pivot podcast with Kara Swisher and does his own podcast as well. And this is CB Insights data. CB Insights is a source of broad investment data. So they're tracking all of the tech, VC, and private equity, et cetera. And this chart was broadly shared and then and shared within the Talent Product Plays Facebook group, which I think most anyone on this webinar may be a member there. But our friend Tim Sackett had shared it and said, assuming that George, who tracks all this, is seeing the same thing in HR tech and work tech. And as you can see, this chart over here is mine. It's got some of the data that we were just looking at. No, we're not seeing that. We're seeing 20, while in the broad VC space, tech space, you're seeing a slowdown. You're seeing the pace slow in comparison to last year, get off to a start through the first half that looks slower. In work tech, we're not seeing that. And, from a personal perspective, I expected to see that. But now we're, several months into this. And at the beginning, you expect some lagging indicators based on announcement and based on deal flow, maybe some folks holding back before they're making announcements. But we're getting beyond that point now. And, I'm not saying that we shouldn't have a word of caution about this or that changes aren't going to take place. But for, as I mentioned, for some specific reasons, it hasn't happened so far. So why most of the time when I transition into this part of the conversation, it's, why is it so hot? Or, maybe this time it's, why are we not seeing the impact or feeling the impact yet? I think if you've seen me do this presentation before, during the high growth times, was talking about dry powder meets low interest rates. That's really no longer true. So that's here to remind me to touch base on that. But the interest rates have gone up. Capital is more expensive across the board. But what is true is a sustained focus on this space. So when we think about the issues in the economy, while there's been some impact on job reports and job growth, we had so many open jobs in comparison to the individuals available, unemployed or otherwise, that the numbers just, the problem is still there. It's still hard to find and retain good talent. And when we think about retention, as we've seen other issues drive wage growth, including the economy, and we've seen this resurgence of employee-focused initiatives and learning and upskilling and reskilling. We see a lot of entrepreneurs, a lot of our HR leaders that we work with, and a lot of investors focused on these issues because these are long-term issues, right? We need to stop thinking about our space in WorkTech as a sort of consumer tech chasing fads that are user preferences, and realize that we have real systemic issues that we're addressing that have been building over decades. COVID did not create most of the trends, all of the trends that we're focused on at the moment. And COVID really didn't create anything except illness, death, and despair, right? So, but it accelerated things along with other societal movements that took place over the last few years. So this mix of, systemic issues that we're addressing in the workforce, in the workplace, in our cultures, as well as, inability to find and retain folks, and our overall status of where, the evolution of technology has really kept investors focused on this space. And we're not seeing any change in buying behavior, pace of buying, in budgeting, or the budget growth that we've seen reported via myriad sources, including our research, very recently accomplished. So that's sort of the what's happening, and it flies in the face of what we're seeing in big tech and B2B tech overall. And a part of this, when you're looking at the media talking even about this space, they're generally getting it wrong. And this is trade media as well as bigger B2B media. And there's a reason that they're getting it wrong. And the reason that I started tracking this in 2017 is, as I was looking at the reports coming into the market, I knew that I was aware of a lot more happening in our space than was even being written about in a tone, in the context of what an incredible amount of dollars that was being invested. It's not just about having the data, it's about understanding how to categorize it, understanding where the different players fit within the ecosystem of work tech and HR tech. And that is, it's not that like a CB Insights or a Crunchbase doesn't have the data, but having the data isn't that valuable. Understanding, how to categorize it and where it fits is a pretty big deal. And I've seen that's one issue. The other is a lot of folks that are in this market talking about these numbers have a dog in the hunt. So they might be an advertising agency looking to expand into broader B2B categories. So they're going to include they're going to puff up the numbers and include a lot of work tech that is really not focused on the future of work. So I say all this not to say that we've got the best insights or the best data, although would agree with that. I say this to tell you to take a grain of salt as you're looking at these headlines and really start to think about how is this being categorized and what does it mean? That being said, let's move on and look at some more of the results. Just underscoring sort of what everybody's up against in HR. This is a slide out of a presentation. You can hear me talk a lot more about what HR is up against at WorkFest next week in just outside of London. If you'll be there, I'd be happy to have a deeper conversation about this. But, you know, we saw incredible movement in the workforce. We saw both in people leaving their jobs for new jobs, leaving the workforce, also leaving their country and working someplace else, people working in a distributed and remote fashion, and wage growth has been, you know, through the roof. This is what HR is up against, and this is also what investors and problem solvers like entrepreneurs and HR leaders are addressing right now. And it doesn't, again, hit evenly across every employer, but these are the issues that are driving most of the challenges that HR is currently struggling with. And so it's a big market, right? The last total addressable market number that we put out was 390 billion globally, but that's across the 10 or 11 countries that we've been tracking. We've got a really ambitious project out. It's underway right now, looking at the WorkTech market, expanding the countries that are contributing to this TAM to, it'll be at the end of it, 25 or 26, including all of the market segments, so SMB, middle, and enterprise, and broken down in a way that can translate across any employer or any tech vendor based on their definitions, and including vertical markets. So we've acquired an incredible amount of data and continue to develop our own data. I've brought in a data analyst that's been working on this with me. And we're starting with hiring WorkTech. We're starting with in the space of recruiting. And this is something that, again, you'll hear me talk a little bit about next week at WorkFest, and we'll be back talking about this repeatedly. But this market is growing. So part of that is the adoption of HR technology in the SMB and the middle market, where I'm continuing to see companies coming off of spreadsheets in almost all categories in the SMB, from about 50 employees to about 500 employees. In the middle market, we're seeing rapid adoption of HR technology across the employee life cycle. And, you know, everything we said in the 90s has come true, right? So the world is flat. Small businesses are competing with big businesses, not just for business, but for talent. And in order to retain talent, they're not just competing with businesses down the street or within their region, but around the world. Service providers, product providers are competing, you know, globally now in their local market and abroad. So this is again, back to what HR is up against right now. It's driving great adoption, and it's driving great market growth from a accessible, serviceable, and available perspective in this space. The other component that we're adding to this study is spend. So we're developing a really good view as to what HR leaders, talent leaders are budgeting and spending categorically across the employee lifecycle, how those budgets are changing, how the economy is impacting it, and then looking at who fits within those categories and what capabilities they bring to the table. So this is exciting stuff, but I said that I would talk about market growth, and this is what's happening. I expect this number will significantly increase as we continue to look at adoption and continue to look at the way the market's been growing. Okay, so digging in again to more of the details, taking it down a level. We track against 4 top-level categories. We just introduced WorkTech as a high level category. It used to be 3 categories, now it's 4. And we currently track against 51 or 52 subcategories that go across. Some of those subcategories will go across each of the top line categories, right? So for example, you could have a collaboration tool in talent acquisition or in HCM or in WorkTech, depending on where that fits. And that's the categorization that I was talking about that's important to realize. And we'll dig into the subcategories in a moment. So Q2 was big for HCM. As we'll see, payroll led in this quarter. And I would take that to an even finer point and say global payroll and employer of record solutions drove a lot of this. But with over 2 billion, it's not global payroll alone. The sort of almost even posture between talent acquisition and talent management is one that we're used to seeing. And again, WorkTech, the interesting thing about WorkTech is WorkTech was, which is where a lot of the collaboration, sort of asynchronous communication, very work-specific tools that I would say were even, I would categorize as products of the pandemic that were launched, as a direct response to what companies were dealing with, over the last 3 years or even 3 years ago. Sounds crazy to say that, but there was a dip where I think a lot of the attention is going into some of the core areas in learning, talent acquisition, and HR. And you can see the deal counts here across those categories as well. Okay, so getting into the subcategories, what were the big subcategories? This is still looking at Q2 specifically. I mentioned payroll. Velocity Global, Remote, and Oyster were 3 of the employer of record solutions that attracted a lot of investment. WageStream is a wage access, on-demand wage access, earned wage access, and they also incorporate components of financial wellness into their solution. But it's an earned wage access solution, which has also had quite a bit of attention, that subcategory, in the last few years. Learning. Really interesting things happening across the learning space. I've seen a lot of chatter about, whether learning is I guess the LMS space is dead or not. I think that's irrelevant. The LMSs are becoming more of a learning experience platform, and experience is present across and has taken a driver's seat across all of the categories. It's no different in learning. But the really interesting things happening in learning are where we've got these, I talk about it almost every quarter. I love the hybrid models like Multiverse, where it is really fits more in sort of 1 foot in talent acquisition and 1 foot in learning, focused on providing apprenticeships and skill development, but connecting young professionals, or I guess any professional in the program, with jobs, with apprenticeships. So it's unfair to categorize them as a marketplace job board, but the marketplace model is alive and well within their platform. Guild had a huge round, and they were the other leader in this subcategory this quarter. Guild is bringing employers the ability to offer, whether it's certification or skill level development, or even degrees or advanced degrees to provide into their employee base. So it's learning. They've got a vast integrated marketplace of learning content that is available. And there's somebody to watch. They're sort of on the forefront of where things are headed from a learning perspective. At WorkTech, you'll find an interview with their chief commercial officer It's just fascinating, some of the things that they're doing. A couple of new subcategories popped up onto the list at the top end. One was compensation. Now, you can see how a big deal like Bequam's $300 million deal, they're a European compensation strategy and compensation management tech. They've been around for several years. And then Pave. Two big deals basically make up that category, and big, deals, mega deals can have an impact like that. But compensation wasn't something that was seeing activity like this. This compensation category at Bequam and Pave also represents sort of the old school in Bequam and the new school in Pave. Pave is more about online, real-time access, empowering individuals, leveraging compensation data, whether it's for pay equity or whether it's for offers in the end of the hiring process, whereas Bequam is more traditional, more of a traditional player in that sense, and their interface and approach would tend to align with that. The other category or subcategory that bubbled up and certainly maps to something that I'm seeing more and more of is the staffing subcategory. So IntelliCare and Nomad Health are shops that are enabling staffing and empowering staffing via some version of a marketplace model, be it verticalized like Nomad Health, or be it more broad. And I'm seeing a lot of this, a lot of what looks like a marketplace job board that is harnessing more of a staffing model or actual independent recruiters in order to come to market. But there are bigger moves afoot. If you look at Bullhorn, who is the de facto market leader from a platform perspective in staffing, this direction of enabling their customers to become a marketplace, more of on-demand talent for their hiring customers, for employers, is a direction I've heard their CEO talk about recently. Talk about with me directly recently. So Bullhorn, if Bullhorn is the market leader and setting some of the tone in the space, they're definitely, I think we're going to see some interesting moves, not just by Bullhorn, but with some new entrants to that subcategory. And the staffing category drives a lot more in our industry than I think it gets credit for. If you look at the RPO and staffing world, you look at the contingent workforce, the dollars that are circulating in these transactions, those are all staffing dollars. Another new category, which had an entrance of one, and again, these big deals can push in a quarter. That's why a quarter doesn't really a trend make. I keep repeating that. But Rippling, who I put under workflow automation, they're not really an HR core HR product. They're not really an onboarding product, but they position within that, and they're integrating and automating a lot of workflow and a lot of manual tasks in the SMB for HR. This is a big round, and we'll look at their valuation a little later. It's pure workflow automation, which I think they've done a really nice job coming to market. I'm not sure if this isn't more than a few features that any HCM platform or any even enterprise employer, larger employer could put together, which is why they're going to be focused more on the SMB. Coaching and mentoring was also hot again this quarter, and we saw Coach Hub lead that category. A lot of solutions entering the market, continuing to enter the market. We've got real issues in leadership and development, and enabling whether it's internal or external or a combination of internal and external coaches, is an area that we've seen tons of growth in the last 2 years. Scale is an issue for a lot of these providers, especially those that are connecting to an external marketplace. Not just scale in delivery of the tech, but scale in delivery of the quality of the coaching. And there's a lot of focus now being put on how do we enable, nudge, empower, educate supervisors and managers to be better leaders, and augmenting them with mentors and coaches where needed, or even for them. So this sort of analysis is available in our VC database, or this sort of breakdown, and we do track across 52 different subcategories, and we'll talk about how many we tracked in this quarter in a moment. And it's also available to any of our advisory clients, sort of ad hoc or via the tool itself. So let's step back and look at the first half. Again, payroll way out in front. And we see, pretty common cast of characters here: payroll, learning, job boards, marketplaces, collaboration and communications, benefits. You can see some of the bigger deals here across the board. I'm not going to repeat any of these. And a couple of things, I pulled staffing up onto this list because, they're in the right place there, but also, the ATS and TA suite, there's a lot of interesting stuff happening. Every year there are new entrants to this space. And this is something that the core platforms tend to, you see the HR suite and HR platform subcategory as well. They tend to get beaten up a lot, but there's a lot happening in this space. And especially, the two primary platforms that we see in the market are more the core HR, HRIS, payroll, and then the recruiting or hiring WorkTech platform space. And there's a lot of interesting stuff happening there. And I'll be talking about, in particular, the recruiting side of that next week at Recruit Fest. So let's back up and compare what we saw in the first half of 2022 to 2021. And the interesting thing for 2021 was how learning eclipsed marketplace job boards. If it's your first time in one of my presentations here, the fact that job boards are up on the top of this list may surprise you. When I extend this list, marketplace job boards are normally consistently the top category. So last year, with a lot of buzz, really the last few years, with a lot of the increasing buzz around upskilling, reskilling, and more experience based technology within the workplace, learning had a huge push. But at the same time, it's so difficult to attract and hire talent that marketplace job boards have really thrived. And now these marketplace job boards are not your grandfather's job board. I don't know, not old school job boards where it's a post of an ad and simply a resume or profile coming through. Many of these marketplaces are providing additional dimensions to what they bring to the table. So it could be more diverse candidates. It could be candidates in a freelance or contingent model that are from an underrepresented geography in the world. It could be that, or emerging market, I should say. It could be that they're providing more services like learning into the candidate community, and employers are investing in developing their talent pipeline. There's really interesting stuff happening in this category. And down at a business model perspective, with verticalization and focus, specialization, job boards have really led the market there, and I'm starting to see more HR, core HR, and more core talent solutions go vertical as well, doing a really good job for an industry or markets, if you will. I think the another interesting thing about 2021, understanding that we ended up at 17.9 billion, and we're currently on pace for that this year, knock on wood. That had some really massive deals, Articulate at 1.5 billion and Eruditus at 650 million, 2 billion in the learning space last year. So when I, go back and we look at what's happening in learning this year, while there have been big deals, we haven't had, billion-dollar investments coming in, and that was Articulate's first external investment, by the way. But it's while there are mega deals worth over 100 million, the story in our space is not that is not what's leading the overall investment. And we go into more detail in the report, which will be coming out later today. Okay, let's keep things moving. The 25 biggest deals, when we post the video, we'll also provide the slides as usual. And you see a real breakdown geographically here. The USA is still leading and is still the biggest market for this technology, but there's a lot of interesting things happening in Europe and elsewhere in the world. So spend some time on this chart when you can get a little more access to it. Okay, so the big deals and the leaders in the subcategories, that's one thing. But this quarter, this is Q2, we saw 277 million in early stage investments across 40 deals, and there were 37 different early stage lead investors. There may have been other contributors or participants in the deals, but these are the lead investors. And we see a combination of some of the best known venture capitalists, as well as smaller, folks participating in this space potentially for the first time. So we had a few players who had each had were lead investors on two deals, Khosla, Pi Labs, and Frumtech Ventures. And when we talk about early stage, we're looking at pre-seed and seed. I think the rounds themselves, there's no real standardization across like what's a seed versus an A. I see seed rounds at 9, 10 million. That would always have been a Series A years ago. I see Series A rounds at 5 to 10 million, as well as up to 100 million and or more. There have been much larger anomalies. It really just speaks to how many times the vendor has gone to raise money. There used to be a lot more consistency into what it meant from a revenue run rate or growth rate. That's just not something that I'm seeing, whether it's here or whether it's through the accelerator. We're looking at the data, or as I'm looking at companies that we're evaluating to participate at Impact WorkTech. So this is usually very helpful for anyone who's raising funds or looking to get into the market. These are folks, and they're broken down by category, subcategory, and vendors in the database, or if we have an advisory relationship, we're happy to tailor the data for any of you who are interested in it. Valuations. So the thing I haven't talked about, and maybe the elephant in the room, we had 18 deals this quarter. That's in Q2. The last 3 months, 18 deals worth $100 million or more. And those are mega deals, those are big rounds. But we had 96 deals overall. So again, while we always have big deals every quarter, have for a long time, and they do pull the numbers up, that is not what drove the bulk of investment last quarter. There's a lot of A through C round investments that were not cram down rounds later on. Some of the B's and C's might have been, but that's not the sense that we got. While at the same time, while these valuations are astronomical, especially if you look at a Rippling, right? Thinking about where their revenue most likely is based on time to market and the data that they have shared publicly. We're seeing one of the things that is happening across tech where valuations are coming down. I'm certainly seeing and hearing that now. I'm hearing about whether it's on the M&A side or whether it's on the investment side, valuations are taking a haircut, and how much of a haircut depends on, it's shop by shop, it's deal by deal. You can see that we had, with Clipboard Health, there's a company that hasn't raised an incredible amount of this wasn't a huge C round to get to a $1.3 billion valuation. I don't know anything about Clipboard Health other than it's a job board that's focused on the healthcare space. But just the numbers, when you look at it, it's being a unicorn, having $1 billion or higher valuation does not necessarily mean that your culture is a growth at all costs mindset. Generally, it's the companies chasing those valuations before they're profitable would tend to have that mindset. But I would just, again, advise everyone to step back and look at each deal or each vendor independently. Earlier stage deals, and really any deal right now, I wouldn't say the calculus has shifted completely away from growth to EBITDA or revenue or profit, but it's largely shifted in that direction, a little bit more traditional. But at the same time, again, if we go back to what's happening in our space and the amount of money that's flowing in, we're seeing an awful lot of interest. So, I haven't done the analysis yet on valuations here in our space versus other categories, but my hunch is that we're holding a little more steady than the rest of the market, except for those on the really high end or top end of this space, like a Rippling, if they were to go back out, or like in some of these EOR type players. Okay, so how does it look over time? We've seen over 1,500 deals since 2017 come in at 42.7 billion. When we started tracking this, we were dealing with much smaller numbers on an annual basis. Never would have predicted to be here now in this space, but this is where we are. The thing I would note about WorkTech is that we introduced it as a category last year. Part of the data project, we are looking at WorkTech as the encompassing category, sort of future of work, progressively oriented HR technology. And we're looking at, we've been defining that and doing the TAM study, really breaking down finer categories there. So we will look at these numbers again in the next 3 to 6 months through that lens, and to see what was happening prior to 2021. Okay, and you can see from an year-to-year perspective how things are shaping up. And I again, not that it makes sense, not that it's something that we're that we can justify given everything that's happening in the world and with the economy, but 2022 is on pace to meet or exceed 2021, which it's already 2022 is already the second largest year for global VC investment in the space at the midpoint. So, and that's by quite some margin, right? We are over 2x 2020 and almost 2x on 2019, which were significant years for global work tech. All of this data is available through the WorkTech VC database. The database itself is launching in a new format. So right now, if you're an advisory client or you've subscribed to data access, it's a Power BI interface with 3 pages that looks at all of the categories, subcategories, geographies, etc., and allows you to slice and dice on your own. We're moving away from Power BI. We've been on it for like 5 years, but moving into a much more flexible purely browser-based sort of native experience that also will work much better mobile. So stay tuned there. But all of our Market Insider members who are basically email list subscribers get access to all of our reports and all of the data that is exclusively put out behind the subscription wall at WorkTech. So I always, like to end with a prediction, or maybe some guidance as to what I'm seeing out there. I want to stress that I'm not a financial advisor and I'm not a financial analyst. I'm a market analyst, and I'm more focused on the impact that the growth capital and the trends are having on the space itself, on HR, on talent, on the emerging technologies, the emerging solutions that are coming into the space. But given where we are and there's so much uncertainty, I'll give advice. I have a lot of operators, a lot of founders that view this stuff. And I would say my insights for them today. If you are lucky enough to have enough powder dry to get through 12 to 18 months, good on you. And you should be looking at the shifts in work and the shifts in where your category is going, listening to customers, and really in doubling down where you can in going to market and bringing those customers more closer. If you are earlier stage and don't have momentum and don't have powder dry, then I would encourage you, and this might go against the grain of what you've heard from a lot of advisors, I would encourage you to start having the conversations. If you need another raise, start having them now, because the time to raise is going to extend if it hasn't extended already. While there's a lot of attention on this category, it doesn't mean that there isn't trepidation from an investor's perspective, or the process won't be a little bit more complicated when it comes to due diligence or sort of digging into the weeds before investments get made. So the urgency from the investor side to sort of jump in and get in early might have waned, given some of the control going to where the cash is. So I would advise you not necessarily to jump at the term sheets that come at you immediately, but to start having the conversations now, understand what is being offered, what the contingencies are, and really focus on that, so that you have a more control, and you're not, sort of the fuse isn't burning short at the point where you do need to bring those funds in. Otherwise, I would say whether whatever bumpy ride we're going to have, whatever storm may be on the horizon, pay attention, because a lot of these trends and business problems, they're systemic, and you need to align your products with where money is being spent. If you need some help with that, I'm here to help you understand where that might be, and dig in. And I would say go as long as you can before that next raise, unless it's a financial situation that you can't avoid. That's everything that I have for you today. OneWorkTech.com is the website. I'll ping everybody once this is available and the slides are available. You've got this data before the report's even live. You'll be seeing that go live later today. I want to thank everyone for attending and for your patience. Recording now.